Hey, good morning, everyone. It's Chris from Defined Risk Investing coming at you with a follow up video to a short I did yesterday, where it was kind of a clickbait title, to be honest with you, where I kind of accused the prop firm industry of being a scam and scamming people out of money, is what I insinuated. And that may be a stretch, but let me do a detailed video of what I'm talking about here. So, the description of a scam is to deceive and defraud someone. Okay, and it's usually to obtain financial gain or some other gain. Now, the definition says to deceive and defraud, and so I guess in technical terms, what these companies are doing is not really fraud in any, and I'm not accusing any of these firms as fraud, and in most cases, most of these firms are very legitimate and upright. However, their marketing tactics are, in my opinion, very deceptive. Um, and here again, I think people are actually making money. A few are making money with them, but a lot are being deceived. And the rules that these prop firms place upon you, uh, in the beginning, they seem like, well, that's no big deal. But as you get deeper to the point where you're actually able to get close to collecting money, they continue to add more and more restrictive rules. Most of them, I'm talking in generalities here, most of them have set up such a system that only a very, very small percentage will ever get to the funding phase. And along the way, I think they're being a little deceptive in how they're doing it. Now, here again, I'm not accusing them of fraud in any way. And in most cases, it's the user that's buying them fault for not really doing their due diligence into what they're really getting into, and I'm going to show you that in a minute here. So having said that, let's get into what I'm talking about. So what these prop firms are doing, and what they claim to be doing, is what they do is they will extend a certain amount of funds to a person, and the person will go through what's called an evaluation phase, where they must follow a set of rules in trading, day trading, because most of these assets cannot be held overnight. So they will go through a series of trades, and based on the size of the account, they will have to prove to the company that they are a successful trader and that they have a strategy that is successful. Then once that's accomplished, once they get to the target earnings of that particular account, they then go to another phase, and that's usually what's called the funded phase, or the paid account. They're just different names of it. But now this is where it's kind of insinuated that this is a live account with live money in it. And once you achieve the profit target, you can then begin to request withdrawals based on the amount of money you're earning with your trades. Now, some give 100% payback, some take 10%. It all varies, and that's all disclosed right up front. The way that it works is and this is just a company that I brought up here. There's a lot of these companies that have launched on. This is a company called Trade Day, and basically they're all pretty similar. Some have minor variations, but this is basically how these companies work. So what you'll have is a series of what they will call the funded amount of the account. So this particular company starts out with the smallest account you can purchase is a 10K account. In most cases, it's going to be $25K, and that's neither here nor there. But then you'll notice with each of the accounts, there's a price, and this is a monthly fee that the user pays to go through the evaluation phase. So, and here's how it would work. Let's just use this 10K account as an example. The user would be charged $99 a month with a profit target of $1,000. So what that means is the purchaser of this account will pay the company $99 a month, and once they achieve $1,000 in profit, they will then be eligible to get a funded account, and then they will begin the process again. And then once they reach the $1,000 profit target, then they will be able to begin withdrawing money. Now, here's the catch, and this is where I'm saying they're deceitful. One of the ways they're being deceitful. Let's just look, let's go up, because they have an account here that is supposedly $250,000 they're going to give you, okay, in a trading account. People are paying for this particular account $750 a month. Think about that. Let that sink in for a second. And we'll just compare, because that would be, I guess, a fairer example. On the 10K, it's $99. So anywhere from $100 to $750 a month, users are paying. Each has a profit target, okay? And in the case of this, the user has to achieve $1,000 of profit. On the 250K account, obviously it's much higher. They must achieve $12,000 in profit before they actually get funded. But here's where the true deception comes in. These companies place what's called a trailing max drawdown, okay, on these accounts. And what that means is their balance on the account, you cannot lose more than this amount, or your account will be blocked. You know, you'll be terminated. You do have the ability to reset it, and that's another scam. But so with the 10K account, if you lose $1,000 before you achieve your $1,000 target, this account is canceled. Okay. On this one, if you receive or earn a $5,000 loss prior to achieving the $12,000, you're done. Okay. Now, when you look a little further below, here's the restriction. On this particular account, they are only going to allow you to trade one mini contract. Okay, so if you look at, I trade the indexes, so if you look at the indexes, say the ES, which is a Standard & Poor's mini future, that's $50 a point, okay? And they're going to allow you to trade one of them. The micro is a smaller account. The micro is usually 1/10 the size of the mini, and in this case, they're going to give you 10, okay? In this case, they give you 25, but when you look at the amount you have to hit, it's all relative, okay? Now, here's where it really becomes interesting. Now, if you'll notice on these accounts, there's a small asterisk right here. Most accounts or most companies don't even put this up there, but you'll notice there's a small asterisk. When you go down and you look where the asterisk is, and look how small this print is. Tier values are based on buying power, okay? To learn more about buying power and margin, click here, and I'll get into that in a second. Here's where I think the deception is being placed. The buyer of this account assumes they are placing $250K into an account for them, okay? What they don't understand, and if you scroll all the way down to the bottom, you'll look down here and you'll see simulated trading, okay? What that really is under that simulated trading, let me enlarge this a little bit, scroll down. During the evaluation challenge, users trade in a simulated markets. Hypothetical or simulated performance results have certain limitations, okay? So what this actually is, and most people don't realize that, more sophisticated people do. Now here again, it's not the company's fault. Don't get me wrong. However, look at how they've buried this, okay, down here. That to me is the deception of the marketing technique. What you are actually getting here is what's called an evaluation account. I call them a demo or a paper trading account, for lack of a better word. Now, I understand these companies have to test you. They're not just going to give you $25,000 or $250,000. I understand that. But most people think this is starting out as a live account where they're actually trading money. Okay? And even though it's an evaluation, they are handcuffing you here. I mean, look at this. 1 mini. In order to make, that's 20 points a person is going to have to make, 20 e-mini points to reach this without having a drawdown of $1,000. Very, very difficult. Now you see here, tier values based on buying power. To learn more about buying power and margin, click here. So if you click that, you get taken to this page. And here again, this firm is going above and beyond to disclose this, even though it is a little buried. Most firms don't come right out and tell you this, and here it is. Leverage is the ability to control a large amount of a commodity or asset with a smaller amount of capital. And right here, they clearly state it. We don't physically put $50,000, $100,000 in a trading account for you, exclamation point. The maximum amount we allow you to lose is the trailing maximum drawdown limit, okay? During the evaluation, we put a simulated balance in your account. This represents the buying power you receive when funded. Then, when funded and live, we provide the margin capital to financing your trading. They never have to put $50,000 or whatever like a $10,000 account. You are never actually getting a $10,000 account. To trade these with a normal broker on a day trading basis, 1 mini contract, usually the broker will require you $500 of margin for day trading purposes. Okay, so in essence, that's all they're really ever giving you, or the maximum drawdown value. Okay, and here they go on to give some specific examples based on different commodities, because you can trade futures in all of these products: oil, gold, corn, other commodities, forex, and then they go on with a few more details. So that is what I'm saying. So there's no doubt they're allowing traders that don't have the money, say $20,000, $30,000 to go and build a day trading account. However, in my opinion, the way they're doing this is very deceptive. And I don't, and the reason I'm getting to this is I don't believe they have to be. They should be upfront with what they are doing, just so that they have more credibility, in my opinion, with the firms. Now, I haven't put the statistics up here. That's going to be a follow-up video I put of how many people actually pass the evaluation. Let me just see if I can Google it real quick. How many people pass? I don't know if the results will come up correctly. Pass evaluation prop firms. Let's see if it comes up here at all. Yeah, right here it says, okay, about 10 to 15% of the people will pass the challenge, okay? Only about 1 to 2% of those traders will ever go on to keep their funded accounts for any reasonable amount of time. Okay? So, and here again, you can't blame the company in a sense because you do know the rules going in, but it's a clever way to, as you get deeper and deeper and closer to the ability to withdraw these funds, they keep adding little twists and turns into the rules so that it becomes so difficult to actually ever get paid that they are making a ton of money. Now, a lot of these companies will offer deep discounts on these monthly fees, and everybody thinks, wow, this is great. I'm saving 70% on whatever the monthly fee is. But it's still just a paper trading account in all essence is all you're doing. So think if only 10% of the people are ever passing even the evaluation fee, that means they're making 9 times that. They're losing to one because the one goes through. So they're making 9 times that in profit every month. They have the expenses. And then only 1% ultimately end up getting actually to the point where they're able to make a withdrawal. So call it what you will. I think these companies are great, but I just think they should be more honest with the people. And I think you're seeing that now with some of the new companies, Top Step, Profit Trader, even Apex. They're getting more transparent in the way that they're working, and I think that's a good thing. Because I think it is a good way for people to learn how to trade without risking huge amounts of money. But if you think about this, this money also really starts to add up. Oh, and I'm forgetting one of the bigger things too. So if you happen to reach your drawdown and your account does get to the point where it's restricted from trading because you broke the rule, they then charge you a big what's called a reset fee to bring it back to normal. And that fee is usually anywhere from $50 to $100 or more to reset it, okay? and really, they're here again, they're not really doing anything for you. So that is not very clear either up front. So I hope you found this video educational. If you have any questions, please leave them below. I'd like to hear what people are thinking about this if I'm the only one thinking this way. And I'll try and get back to you. So thanks again. It's Chris from Defined Risk Investing, and hope you all are having a great day and you have a great week. Bye now.